Trying to day trade around a full-time job can be a real challenge. That's why in this video, I'm going to show the exact process step by step, and there'll be some real gems along the way. If you're new to trading, remember that trading is risky. You just cannot avoid the losers. Losing is a part of trading. So this isn't going to be a get rich quick scheme or a how to avoid losers scheme. But if you want to know how to day trade around working full-time, then keep watching. And this video is based on the strategy that I use to day trade the live markets. In fact, the trade that I will be sharing with you is one I actually took this week, trading in my account with a prop firm for 5%ers. I'll talk more about those later in the video. As always, please remember to like and subscribe to the channel. All of the software that I'll be using is linked in the description below. Let's get straight to it. The first question that you'll need to ask yourself day trading around working full-time is, when exactly are you going to trade? And that's why my first step will be to check the news. Looking at a calendar that shows you any upcoming news and events can really help to provide clarity and give you direction as to when exactly is the best time to trade, and more importantly, when are the times to avoid trading. And for this, we will look at forexfactory.com. Forexfactory.com is a brilliant free resource, and the main thing I do on here is I go onto the calendar tab at the top. From here, you can see a list of all of the upcoming news. Now, this is strictly for Forex. It's in the name, forexfactory.com, but it does show you major news releases due out for the different major currency pairs. So if we look at next week, the week beginning the 27th of October, you can see the red flags here. We've got high impact news due out for the Japanese yen on the Sunday, on the Tuesday for the dollar, Wednesday Australian dollar, and it also gives you information so you can see this is CPI. And if you click on the more detailed tab, you can see more information there. Now, all I would really do with this is to know when major news is due out. Typically, if there are any major news due out, I would avoid those pairs until the news has been released, because sometimes news can be very unpredictable and it can be really volatile. So it can be harder to leave any trades open during the news if you're not actively managing them. For example, looking at Monday and Tuesday, we've got major news for the Canadian dollar on the Monday, and on the Tuesday in the afternoon, US dollar has major news. So you could look at a different pair on Monday and Tuesday, avoiding those two, such as the euro pound. There was a trading opportunity for that pair based from the technicals, because you know there's not going to be any major news released due out on those that may affect the movements. Now, of course, it's also important to look at news in general to see if there's anything that may affect a pair, or if you prefer to use this technique for trading, say the SP 500 or gold. It's just always important to consider any major news due out. The next step in my process would be to then look for a market or an asset to trade. A lot of this will depend on what you prefer to choose to trade. So you could look to trade a commodity such as gold, you might prefer to trade an index, or you might prefer to stick to Forex. Personally, I tend to stick to Forex and I like to trade pound dollar, but there are different ways that you can choose an asset to trade if you are not sure. Different websites will have something called heat maps, so you can look to see what is currently strong and what is weak, and then you could look at the two compared with each other. Or you may choose to simply look at an asset pair that doesn't have any news coming out for it. In my opinion, one of the best ways to find an asset to trade is simply by keeping a watch list, by monitoring different market movements and seeing if any are lining up for a trade based on the technicals. And for this, I like to use Tradingview. I've been using Tradingview for many years now, and what I really like about it, they have a watch list panel here. So you can see I have a list of lots of different assets, a lot of cryptos at the bottom there. I don't day trade that. But quite honestly, my main pair that I stick with for day trading, and if you watch my channel, you'll know this already, is pound dollar. Because I have found from experience that if you just monitor a small amount of assets for trading, you will have better opportunities because you will get to know them a little bit better, and you might find it a little bit easier, or might make it a little bit more simple to follow. Now, step number 3, and this overlaps step number 2, because depending on step number 3, it will help you to find an asset to trade. And that is to look for a break of a key daily level. Now, this is part of my personal strategy that I use, and it can be used for trading both break and retests, as well as breakouts if you are day trading. Now, for this example today, we're looking at a simple break and retest strategy, but it is a break of a key daily level. I like to use an indicator to make this process a lot quicker. indicator, and that is the daily high and low indicator. And it literally just adds this horizontal line on. The dark blue line shows the previous daily low, and the light blue is the previous daily high. And what I would use this for, what you could use this for if you cannot trade during the day, is on an evening when you find some time to look at the charts, you could go through your different asset pairs and you could see if any have broken that key day level during the day. So as you can see here, pound dollar, I've taken this back in time to the time this week when I actually took this trade in the live markets, and this was on Monday evening. You can see we've got a clear break of the previous daily low here. And more importantly, price closed below it. Now it's important to note the time that this happened as well. So this occurred during the Monday. It's the start of a new week. So for this weekly price action, this is all we have here is what you can see. This push down, break of the previous key daily low. The next step would be to identify a good place for a trade entry. Now, as I said, this is a break and a retest. We don't want to just set an order to go short here because price is going to want to pull back. But here lies the problem is if you have a full-time job, you're not around during the day to watch the charts, what are you to do? Well, we can utilize some different drawing tools to help us to identify a place where we can set an order to go short following this trend down. The first step would be to identify current market structure. And this is a really simple process. You're just looking at highs and lows. So analyzing this day on the Monday, price opened at this point here. It made a high and then it made a low, breaking the open. So price is swinging lower. It pushed up, made a high here. It couldn't break this previous high, and then it pushed lower. And you can just repeat this process to help you to see where the key structural points are on the charts. Now you want the most obvious points. From this level here, we got the strong drop off and then price is kind of consolidating at the bottom here. And so because this is the strongest structural level here, I would use that as an anchor point to place my Fibonacci retracement tool from at the bodies, and I'd place the low here at the bottom of the swing. I've got my Fibonacci retracement tool set up to show me these 3 levels of optimum trade entry. Now I created a separate video talking more about that if you want some more information. They're basically at the 62%, 70% and 79% levels. Historically for me, these have been a good place to set a trade. Step number 5, once you have identified which asset you want to trade, you found a potential trade setup, a break of that key daily level, you've identified a good place to get in, but you can't set this order during the day because you're not on the charts and you can't watch and wait for price to come back. What are you to do? Well, there is a brilliant way to get into a trade without even being near the charts, and that is by utilizing limit orders. If you're not sure what a limit order is, I'm going to show you right now here on the platform on MetaTrader 5. Now this is the account that I trade with the 5%ers. In fact, if I go into the history panel, you can see right at the bottom here, this is in fact the trade that I am sharing with you on the charts as we speak for pound dollar that I took this week on the 22nd of October, and which gave me a nice little profit. And to do that, I used a sell limit order. Now the market's closed at the moment, so I can't exactly set this in the live markets, but there are a couple of ways of doing this. So once you find out where you want to sell, say that you want to sell up here, you could right click, and as you can see, there's sell limit, or you could go trading and it'll say new order. This will load up the order window. Now, if you're not on MetaTrader, most platforms will have the option for a sell limit, so it might look different, but it will be a very similar process. Where you have a type, it says market execution, which means that you are executing at the current market price. You click on that, you click on pending order because it's not been triggered yet, and under type you have this new box come up and you want to make sure that says sell limit. And what a sell limit does is it waits for price to pull back up to where your order is, and once price crosses over where your order is placed, that will then sell. It will then trigger you into the trade. So it's a way to automate your trades. You can set a sell limit on an evening when the market is open, and then you know that will get triggered if price hits it during the day, even if you're not at the charts or on your broker. When you are using limit orders in this way, whether it is a sell limit or a buy limit, it is crucial to remember to set your stop loss. As I said before, trading is incredibly risky. You cannot guarantee it's going to win, and so you should always plan for if you're going to lose. And one way of doing that is by utilizing a stop loss order. A stop loss order, if you don't know, is a way to add a safety net to your trade. So if your trade turns against you, if it starts to go in the other direction, you can be sure that it is going to automatically get you out of that position with a manageable sized loss. It stops your losers from getting out of control. Most brokers, most platforms have the facility to set a stop loss. Let's have a look at that now. back in my order window here on MetaTrader, and we were setting the sell limit order. Now the price is where you would set your current market price to sell. So if I have a look back here on Tradingview, if I was to sell at the low of this Fibonacci retracement level, this would be 1.3011. And a stop loss is where you want to get out of the trade if it goes against you. So for this example, we're actually going short. So it would be a stop loss would be a place where it would buy back if it goes against you. And for my trade, I used a 20 pip stop loss, which was up here. So this was 1.3031. And you can simply enter that in to your trade panel. And the same would be said for a take profit. If you are away during the day and you can't manage your trade, it's really important when you set your limit orders to include both a stop loss and also a take profit, because then you can really let the trade work out. When you have time, you can always check it and manage the trade if you wish to, but at least you know if you get busy and you can't do that, that your trade is either going to win or is going to lose. The last thing you'd want is to have a trade open with no take profit, allow price to go into profit, and then come back and stop you out. Believe me, it stings. And so we can use this forecast tool to help us to see where a good place is to set a take profit order. Now, this is a trade that I actually took this week in the live market, and I had my take profit order here, 1.5R. So it's a positive profit loss. You're aiming to make more than you're losing. And I was aiming for a push down to retest the lows here, which would be 1.2981. Once you have your trade, you know that you're trading the right pair, you've placed your entry, you've used your stop loss, your take profit, and of course, this is a limit order. You can click place. And a bonus tip, if you are truly really busy during the day, you don't have time to just check the charts, you can utilize alerts. Most platforms allow you to do this. Tradingview certainly do, and it's basically where you hover over some key parts of your trade plan. So for example, you may set an alert at your stop loss, and you may set an alert at your take profit, and it just means that you will be alerted. There'll be a pop-up on your app on your phone when price has hit those points. I use alerts all the time to help me during the day, so that if I don't get time to actually look at the trade, I can look at my phone and it comes through like a text message, and I'll know when I've been triggered into a trade because I set an alert at the entry, and then also if it's won or if it's lost. But for those of you who have been interested in following my journey trading with a prop firm, here is an update on my account this week. So I've been trading the hypergrowth program with the 5%ers. I've actually been trading it for the most part of this year. I have been swing trading this, and I've been only taking mostly just one trade a week. So I am really having a slow approach to trading this account, but it doesn't really matter to me because it's all about the growth. And this week I've had another step forwards, making a nice profit. I'm getting very close to that target now. Once I've hit my $22,000 target, that means I'll be able to trade this as a real account, which means that I'll be able to withdraw the profits that I make on the account. So it's super exciting. Now the 5%ers have a few different programs available. This is hyper growth. They also have high stakes, which allows you to have a smaller profit target and a larger stop out level. And they also have a bootcamp program available. In fact, if you were watching this close to when I published this video, they actually have a super event coming up. I'm going to share another video with more information about it, but it's coming up the first week of November, and it's a way that you can trade a 20K bootcamp program for free. So make sure you check that out. But it's why I love working with the 5%. They have a lot of courses, workshops, programs. They have a lot of support because they genuinely want to help you on your trading journey. And to be fair, as I'm getting really close to this target, I'm also thinking about having a go with their other program, maybe the high stakes. We'll see. In conclusion, in this video, we've covered different key steps to help you to day trade, even if you're working full-time. Now, I don't currently have a full-time job per se. I don't need a full-time job. I am more busy now than I used to be when I had a full-time job, because my full-time job is both being a mum to 2 preschoolers as well as balancing trading. And so I don't always have time to trade during the day when those opportunities present themselves. That's why I'm taking it so slow in my funded account. But I do utilize all of the steps I've shared with you today in this video to help me to capitalize on those opportunities, even around my full-time commitments. Just remember, keeping an eye on any upcoming news. You don't want to be caught out with the volatility. Obviously, looking for a key technical signal to help clarify the trade will help you with your accuracy on the trade result. And of course, remember to manage risk. Risk is crucial to success as a trader. It's not to be underestimated. And you can do that by utilizing that stop loss order that we talked about earlier. If you've enjoyed this video, please let me know by smashing the like button. Don't forget to subscribe to the channel below, and I'll catch you in my next video. Thanks for watching. Bye.